Good afternoon. It is November the 12th, 2019, and I want to go over a blue chip stock that I consider to be a good buy. I want to go ahead and give the breakdown details of Walt Disney and where we stand with this here, why I consider this to be a solid blue chip stock. Okay, so what we have is Walt Disney's company, and I'm going to give you a lot of the highlights, the changes, comparisons with other competitors. What are the details of Walt Disney's ownership percentages? What other companies are involved? And we're going to look at also a few different charts here to the right and make a comparison and see where we're at. So you have the time and you want to invest into Walt Disney and want to understand a little bit more, please join me. Okay, so currently we're at $1.3858 here, and Walt Disney is a network media segment including cable and broadcast television networks, television products, and distributing operating. It's a domestic television station and also radio networks. So they own a few. They also have a studio entertainment produce and requires live action and automated motion pictures directly to video content, music recordings, and live play stages. Also, the company develops and publishes games, primarily mobile platforms, books, magazines, and comic books. So they do a lot. That there has a lot of different arms to keep them consistent over time. Some of the highlights are parks, experience, and products in the U.S. theme parks and hotels, international parks, hotel consumer products, and international media. They constitute over 41% of other stocks. In the media networks, Disney channels, and other broadcasting, they constitute over 31% of the tariffs prices estimated in Disney stocks. Disney Studio constitutes 26%. Okay, so what we want to look into now is who are those that they actually own? Who are the companies that they actually work with and have a percentage stake in? BAM Tech, they own 75% of BAM Tech. It's a video streaming company originated by a Major League Baseball, created an ESPN brand. Turn the music down a little bit. And so, over the top video streaming services, ESPN Plus was launched in April 2018 for an annual membership of $50 and $5 per month. This services offer scores of highlights along with other stream channels for cable subscribers. So they are connected to streaming and also other cable subscribers. It's very important to look into other cable subscribers and see how they're actually performing as well. An ability to subscribe to a live event. Current ESPN boasts about 2 million paid subscribers. Disney also plans to launch Disney Plus, a streaming service for subscription fees of a 7-month or $70 per year in late 2019 of November. The services will have a vast library of Disney's and Fox legacies containing content as well as new and exclusive TV shows, movies, and documentaries. Disney also owns 60% in Hulu stream services. So 60% of Hulu stream services is owned by Disney. Following an acquisition of 21st Century Fox, recently worked out a deal with Comcast to purchase their remaining ownership of Hulu by 2024. And simultaneously gain an immediate open operational control. Hulu saw huge growth in 2018 and ended in a 25 million subscriber. So that is good. They actually pretty much own 60% of Hulu, the streaming services. Everybody's familiar with Hulu. You're familiar with Netflix. and they're looking to go ahead and get the rest of it by 2024. So that is a good, between Hulu and Netflix, I think they're pretty much in good competition. Of course, they're competitors to Netflix, and that's one of the things we want to look into as well, to see how companies like that are doing. Walt Disney reported a $20 billion in 2019 third quarter, marking a growth of 33% from the $15 billion that they projected. So they was actually over their projection from this third quarter of this year. Let's keep on going down further. Disney will be launching its own streaming services, Disney Plus, by November the 19th, 2019, which is this time here. Per $7 per month, Disney Plus is in. So they're looking to compete with Netflix. It says here as well. Have many movies and television shows as Netflix, but hopes to draw customers in with lots of more high-profile exclusive content. And nearly every movie in Disney's expanded library could be a number of previous to hard-to-find animated features and live-action Star Wars and Marvel comics and Universal spin-off, things of that nature. So they are definitely have their hands in the pot of technology, the mobile use of streaming. And let's see here. Potential upsides and downsides. We estimate this figure will increase on the FICO. Let's see if this is anything of importance. Cable and network. I don't think that is much importance to that. They're still speaking about their competitors. And so I wanted to go into the actual charts. Well, let's read a little bit more here. Of course, we know high cable and satellite operator fees. We know DirecTV is one of the competitors. We know AT&T is a competitor. Comcast is, matter of fact, it even says it here. If I can highlight this. Companies such as Comcast and DirecTV paid Disney to include its cable channels. So they paid Disney to include their cable channels, such as ESPN and Disney channels, ABC Family, and others programming packages. These operating pays a handsome amount of fees for ESPN, $7.50 per channel. The high amount of fees charged along with the pricing results in healthy and revenues make ESPN and other cable networks most valuable to Disney. Okay, so we're not going to go too much into, we get the logistics of the trends. Increasing pay to TV competition, increasing sports programming costs, declining DVDs and expansion streaming, online licensing and broadcasting advertisements. And so now let's pop over here and see what we have when it comes to Disney first. And see what they look like financially here. We want to always follow the money. The news is one thing. Being an economic analyst is one thing, but being a technical analyst is definitely needed without so much of emotions. This is where the money is at. This is how you follow the money and really understand what's going on with a company. Now here, it is definitely on the move. We're in a monthly chart here, and these are all monthly candles. And I would say this is the base. Back in $90 is the base. I would say the new base, I would still hold 90 as the base, and 120 should be the new base. 120 should be the new base to hold above. And we definitely have had some holding here where if we had a sell-off, we had some sales, but immediately it came back. That is a very good demand for the supply. So as they try to liquidate it and make it cheaper, people are still buying. So regardless, it has been an immediate buy up every time it has been liquidated for a cheaper sale. And so let's go into maybe a weekly, and we're just going to leave it at that and move on to some other competitors and see what we have. So this is not stating anything about when to get in, when to purchase. It may be a pullback here, and getting back a little further back into the 130s. One may be a good fit for some. Some may just say, hey, let's go in with it now because everything is moving. This definitely looks more of a continuation to the upside, but we do have resistance here at 139. And so if we can make it over that 139 mark and hold over that 139 mark, then we can look for more support to keep on pushing past this here, because it's already attempted that hold, but it did not hold or whatever, and so, but we still have a good supply. It's consistently in the supply here. So I want to look at Comcast, one of their partners / competitors, and see what is old Comcast doing over here. I can find them. Okay, so now we have Comcast on a weekly basis, and they look bullish as well. They're in a range currently, but still pushing in that range. So no signs of sell-off with Comcast. We had initial sell-off, and they have made their way completely back up and trying to hold above. So we may be able to come back here, and I would expect to continue back on up on Comcast. It is the month of November. This is typically a good time for people to be stationed at home, around family members and so, and definitely watching sports, things in that nature. So these are, I would expect, to be some of the better times, better seasons for cable companies. Let's go with Hulu. Actually, Hulu is not listed. ESPN Plus is also not listed. They don't. They're associated with the other network names that I haven't tracked down yet. But those two are not standalone listed. Fox. Let's go with Fox. Fox Telecommunications. We're looking pretty good. And this is on a monthly basis here. And as you can see, if we continue to hold around this, above this 33.84 here, then we are definitely pushing strong. They've had their earnings, and since those earnings, even with low volume, the prices this was the volume to break over the break line. The way I look at this here, this was broken here. This is a buy, obviously, and this big red was a break. It broke through that buy, and it did not hold. It's just like a liquidating area, but we have very good, strong demand, strong supply. Nobody is selling off here, and although we broke that buy, we're right back into that buy. So immediate turnaround to come right back in is a good supply and demand, and considering consumers are still wanting the services. Okay, so Fox is looking pretty good. These are the competitors that we want to appraise next to get a feel with here. I don't know if Netflix has am I tripping? I don't know if Netflix has anything or not. Or they do. Or they don't. Okay, so we'll leave that one alone. And DirecTV also, we'll leave that one alone. But Cox Communications Network, I think they're Cable One. Let's go to Cable One here. I think that's Cox, but either way, it is a cable company that is very liquid here. They are on the move. As you can see, this is on a weekly chart, and I pull it back on a monthly chart. We pretty much have the same thing. And here, they are really pushing. Investors will love Cable One. Some of the news that is reporting. So, of course, the cable industry during this time, it should be thriving. So I just want to give you an analysis with Walt Disney. Walt Disney definitely looks like a great buy for me. Looks like a buy for anybody. This is a longevity blue chip stock, and I want to do a report on them. And this is not for advice. This is just for my records and practice. But everybody makes their own decisions of where they get in and get out. I just wanted to give you some idea of what you're looking at. Sometimes you hear things on the news, but you really don't know exactly what's going on. And you see bigger companies sometimes to fall if they don't revamp their business profile, their business model to get with the times. And a lot of the times is going with online streaming, of course. So there you have it. I'm not going to drag it on. And this is the blue chip stock. I would say is a great buy for Walt Disney, for anybody that wanted to look into for a future for longevity. All right, thank you again.